Big tech stocks in the Magnificent Seven are down 20% in a bear market, and they'll probably claw out of a bear market out of hibernation this week with Nvidia to lead the bounce. My name's Jessica Amir, a market strategist here with Moomoo. It's great to have your company for the daily this Monday, the 17th of March. So I guess the tone has been set for a rebound. Bets are rising for the market to break higher and for big tech stocks to claw out of their bear market. If we look at the Mag 7, it has indeed been rebounding out of oversold territory. And we saw a pretty particularly maybe promising charge up on Friday. So what is going on? Well, global markets could lift this week, but the catalyst this week will probably test that theory. All eyes will basically be on the Fed if that signals potential rate cuts are coming this year. So we'll be keeping an eye on what we call their dot plot. And we'll also find out how much more money will be flowing into AI because, of course, Nvidia is kicking off their biggest AI event of the year, and that typically triggers a rally in Nvidia and semiconductor stocks. But the wild card, of course, is more tariffs. If we see more tariffs announced by Trump or other countries, that could set markets lower. So where are we now? Well, on Friday, we saw the Nasdaq 100 surge 2.5%, and the market's fear gauge, known as the VIX, that is pretty much calmed right down. So that enabled stocks to charge on up. And that's why Nvidia popped up 5%, Palantir up 8%, Tesla up almost 4%, with Meta, Amazon and Apple all bouncing up off their lows. But still, most big tech names are indeed in bear markets. Nvidia is down 20% from its peak. Tesla's down 51%, Alphabet down 21%. Meta, Amazon and Apple, Microsoft, all down about 20% each off their peaks. Meanwhile, we have seen the brave investors buy into the dip. They've been smiling, with Nvidia shares now charging up 16% up off their lows. Amazing stuff. Tesla's now up 15% up off its low as well. But today, the Aussie share market will probably see a bit of excitement. Earlier, the futures were suggesting a lift of 0.95% and a break to 7,867 points, and that would indeed take the Aussie share market out of a correction. Now, momentum indicators are suggesting that more gains could potentially be ahead. Tech stocks are down under will probably be the focus this week, with traders to be really looking for gains to be maintained in some really hot rises that we saw last week in SiteMinder, Technology One, NextDC, Megaport and WiseTech. They could also be potential winners announced from quantum computing announcements at Nvidia's GTC, as well as Chinese stimulus, which we're expecting to be announced on Monday in the Asian Pacific session. But I do really think it's worthwhile focusing or perhaps looking at WiseTech Global. WiseTech Global is one of the biggest tech stocks in the Australian share market, and its shares are well and truly in a beyond bear market, if I can say that. They're down 40% from their record all-time high. And that was, of course, on the back of board concerns, as in concerns with their board and allegations against the founder. But what's really interesting is a lot of fund managers who I know, a lot of conferences that I'm attending, a lot of investment managers, including Firetrail and the like, have actually been chatting to WiseTech's clients, so CargoWise's clients, and the clients really aren't concerned with what's happening at the board or about the former allegations upon the WiseTech founder. Now, this basically suggests that it could be worthwhile looking at WiseTech as a long-term buy, particularly if you believe that WiseTech is growing its dominance in freight forwarding software, that is. And of course, if you believe that WiseTech is a monopoly, which it somewhat is, and of course, WiseTech is rolling out AI to cut costs, then you might indeed think that WiseTech shares could be compelling for a long-term buy, knowing in history, WiseTech has always recovered from a bear market crash. In fact, for those that aren't across the stock, I just would encourage you to remember what happened back in 2021, 2022. WiseTech was actually down 40% from peak to trough, a similar pullback to what we're seeing and showing on the screen right now. And then guess what happened after it hit a new low? That was a record low back then in 2021, 2022. WiseTech then only took 1 month and 27 days to surge back to a brand new record all-time high. Just outstanding, massive turnarounds. And this basically shows you how ferocious rebounds are in tech stocks such as WiseTech, given that almost 100% of its revenue is under contract. Let's moving along to other markets and focus points. Gold is holding firm above $3,000 with a calmer US dollar likely to potentially push gold up even higher. That's if this week we see the Fed signal some rate cuts on the horizon, potentially. Meanwhile, you should also keep an eye on US listed China stocks and Hong Kong's market. Hong Kong's market is now up 20% this year, or just about that. And it looks like it'll probably continue to climb up further over the long term, particularly because we are awaiting China to unveil new stimulus and boost consumption. A stock that I think should be on your radar is a stock that's doing particularly well, Alibaba. This is the US listed version, Baba. It should be on your radar. That's because China is expected to announce plans to increase the minimum wage and also boost domestic spending. So Baba could be a key benefactor of that. For all the stocks that we've mentioned today, head on over to Moomir's platform. You'll find a lot of detail there. Stay safe, happy trading. Thanks for your company.